Hello, everyone. Happy Monday and welcome to Crypto Club. This is Public's weekly show to keep you up to speed on all things crypto and Web3. I'm your host, Annika Lewis. Crypto Club features conversations with industry executives, entrepreneurs, developers, and other leaders ushering in the future of digital currency and blockchain technology. And today we're focusing on the liquidity crunch that is sending shockwaves through the crypto market. Popular lending platform Celsius Network announced on Sunday that it is pausing all withdrawals, swap, and transfers between accounts due to extreme market conditions, and says it is acting in an effort to stabilize liquidity and protect assets. The Twitterverse and news outlets have been covering the story like crazy. So to help us break it all down, we have Dan Roberts, who's editor-in-chief at Decrypt. Dan, thank you so much for joining.
Hi, Annika. My pleasure.
All right, well, to get started, we probably have folks who are listening who don't know about Celsius, what it is or what it does. So can you start by telling us a little bit about how Celsius works and what the current issue is that it has run into?
Sure. And, we can start with that since that's the breaking news. But at some point, it's probably worthwhile to zoom out a little bit and talk about the broader crypto recession that we've seen in the last 5 or 6 weeks because, crypto prices were pulling back dramatically before this Celsius drama. But Celsius is one of these crypto lenders, and they've been pretty controversial. When things were great and heady in crypto markets in 2020 and 21 during the pandemic, these companies kind of emerged and went hard on marketing and were basically promising very high customer yield for depositing your crypto into an account with them. So these high yield crypto savings accounts. Now, of course, on the back end, they are investing in crypto with your crypto, and they're also in many cases lending crypto out to more sophisticated crypto firms. So the peers that Celsius has include BlockFi, which is probably better known and more of a household name, and also Nexo. And we saw these companies, really come under fire about a year ago when multiple states had financial regulators and financial agencies send them cease and desist. And basically the SEC made very clear, we view these accounts, these high yield crypto accounts, as essentially unregistered securities offerings. And I mention all that as background because, that's not necessarily what prompted this Celsius meltdown last night, but it's all related. BlockFi came out a few months ago and said that it came to a $100 million settlement with the SEC and will register its products. Celsius and Nexo have come to no such settlement. So maybe BlockFi will be the one of the three that, survives here. But to get to the actual news, last night, Celsius all of a sudden posted on Twitter an announcement of, as you said, freezing all withdrawals and swaps. It said, we're taking this action to put Celsius in a better position to honor obligations over time. It's for the benefit of our community. And then here's the key, guys. In order to stabilize liquidity and operations, you never want to see that, right? You never want to see a company. And by the way, we talk all about decentralization in crypto. This is a centralized company. Don't forget, this is not a DeFi platform. This is CeFi, centralized finance. You never want to see a company in which you've deposited money mention anything about having liquidity issues. So, of course, there was a freak out. Celsius's token, which is CEL, which was as high as $7 a year ago, went down to about 30 cents, fell like 80% in an hour. And again, as I mentioned before, worth keeping in mind that crypto assets were falling and having a pretty bad weekend even before this Celsius news.
Right. Yes. A lot of news in the last 24 hours and even in the week before that. One thing just for those who aren't as familiar with the crypto ecosystem, I would love for you to dive into is you talked about Celsius being a centralized company and kind of CeFi as opposed to, true DeFi or true crypto native. Can you maybe talk a little bit about the distinction there so that folks who are more outside the crypto space might understand that?
Yeah. And Annika, that's the question in crypto right now. And I first wrote about Bitcoin in 2011. I've watched all the narratives evolve and change. And what's funny now is you have Bitcoin people who, by the way, in the last few weeks have looked pretty right with their rallying cry about, there's only Bitcoin that matters and Bitcoin is still doing what it's supposed to, whereas other chains and networks have outages and, problems, and Ethereum's merge has been delayed multiple times. Now those same people have even kind of tried to get away from the term crypto. There's this interesting split where crypto is now seen as, the same as Web3 and referring to everything else outside of Bitcoin. Now, when it comes to...
Nope. Dan, are you still there? I think we lost your audio.
I am here. Yeah. I don't know if it was a service issue. You got me?
There we go.
Yeah, so
Yep.
DeFi, decentralized finance, are platforms that completely run on code. Uniswap is the best example. These are exchanges where there's no middleman. And of course, for many crypto purists, that's the whole point. Decentralize everything, cut out the middleman, cut out the controlling party. The only problem with that is then when there's an issue, to whom do you run, right? I mean, there's no customer service. There's no one to help you. There's no bank to call and say, there was a fraudulent charge on my card. So there's pluses and minuses of a centralized company versus DeFi. I mean, what I always say is, for now, you can talk up DeFi all you want, and it has grown very quickly. But for the average person, who may not own any crypto, but has seen headlines about it and maybe has just now decided I'm ready to buy some, they're going to turn to a company like Coinbase. It's publicly traded. It seems vaguely trustworthy. They're going to buy their first bit of crypto from a centralized company that they know and trust. Maybe that's Robinhood. Maybe it's PayPal. Maybe it's Square, now called Block. But those are centralized companies. And so what the crypto people can point to with this Celsius meltdown is they say, not your keys, not your crypto. And what they mean is, hey, it's your own fault if you put a bunch of money into this platform that looked too good to be true and probably was too good to be true and was promising giant yield. And saying, don't worry about what we're doing on the back end. And I'll give you just one example of what they were doing on the back end. I don't want to get too into the weeds, but it looks like the company was heavily exposed to an asset called STETH, which is STETH, and that is staked Ethereum, which is a token from Lido Finance, which is a DeFi liquidity protocol. All you really need to understand without getting into the tech is this company was, taking customers' crypto, and this wasn't a secret. If you wanted, there was probably a section of their website where they lay it out. But they take your crypto deposits, and on the back end, they're investing in other crypto assets and lending some of it out. And they were overexposed. They probably had Terra exposure too, although I'm not sure about that. But none of this should be that shocking because, again, at Decrypt, we've covered for months the high risks with these high yield lending companies.
Right. And so, yeah, it makes sense that naturally, if you've got your deposits on the back end that are, being used for something else, and then that something else doesn't end up playing out, Celsius ends up in this situation. To your earlier point, you mentioned kind of the potential Terra exposure. We've seen craziness in crypto in the last few weeks with the Terra and Luna collapse. Zooming out from just the Celsius situation, kind of how does all of this link together, and what are you seeing in the macro markets that kind of maybe point to this or could have foreseen this story?
Yeah, and that's the question I love to answer. I mean, just to have a little bit of perspective. And by the way, guys, I mean, this is not to minimize the current crypto crash. I mean, this is ugly, it's bloody, it's bad. But I think that it would be a mistake, and you're seeing a lot of places do it, and both people and news outlets, to look at all this. And again, many are doing it because they use this opportunity as a victory lap to say, see, crypto was a scam and it's a fraud and it never made sense and now it's dead. I've seen a lot of those takes. Ha ha ha, point and laugh. People who were already crypto skeptics, whenever there are big pullbacks like this, they're able to point and say, see, crypto doesn't work. But this is different from 2018. 2018 was the last big crypto winter. Now we're, I don't see how you could argue we aren't. Now we're in another crypto winter. But this is different because you're seeing the same kind of pullback in tech stocks. By the way, not just tech stocks. I mean, really the entire stock market, as we know, for the last few weeks. And in fact, it's really important that we mention here, Bitcoin has been more correlated to the S&P 500 and the NASDAQ in the past 6 months or so than it has since early 2020. And so that is calling into, question these narratives that have been going on for years, that Bitcoin is a hedge against inflation. Bitcoin is a store of value. It's digital gold. And what I like to say is, let's remember it was supposed to be a technology. The original white paper said it was a peer-to-peer electronic cash system. So maybe people just got a little bit ahead of themselves and got over their skis thinking that Bitcoin was supposed to be this big, magical, wonderful thing that goes up when stocks go down. Right now, it's all going down together. So it's not just crypto. Tech stocks like Snap, Facebook, I guess I should say Meta, Zoom, Pinterest, these names have been dogs in the last few weeks. Some of them, Netflix, some of them are down worse than the leading crypto assets. So my point there is just it's macro right now. It's not necessarily just about crypto. And in fact, maybe it's mostly not about crypto. It's about inflation. We got the CPI reading last week of 8.6%. That was brutal. right now there's kind of nowhere to hide, right? So it's just important that we keep that in mind when we see screaming headlines about the big crypto crash. And again, Celsius is its own thing. Terra was its own thing. Last week we at Decrypt covered a Chainalysis report that said that, despite the Terra meltdown, which was really dramatic and crazy, Bitcoin's recent pullback is likely not due to what happened with Terra, but due to macroeconomic stuff like tech stocks.
Right. I think that's a really important distinction to make, because I think people can conflate them and think of everything as the same. And I was going to ask as my next question. I think you've already answered it, whether confidence in crypto can rebound from these two events, being the Terra collapse and now the Celsius debacle, that have been pretty devastating for investors. I think, long term, I think your suggestion that's implied here is the answer is yes. But anything more to talk about on that front?
Yeah, absolutely. I mean, again, I sound like some kind of crypto crazy here, and we don't dispense investment advice. And in fact, I'm not heavily invested myself. I'm not out there telling friends to go buy crypto. All that said, what I like to say is, this stuff is not going to suddenly collapse tomorrow. And I know that that's, hard to hear and believe after watching what happened with Terra. But again, that was a unique case. And, there were people saying, oh my God, I've lost all my savings. Well, you probably shouldn't have had all your savings in a crazy new algorithmic stablecoin that has only existed for 2 years. Terra was its own extremely high risk, even higher risk than the rest of the crypto industry problem that a lot of people had predicted would melt down. And then, same with Celsius. These are very new, very unproven, untested companies. And it would be a mistake to conflate, the latest example, which is Celsius last night, with assets like Bitcoin and Ethereum, which have proven themselves over many years. So I think what we're about to see is a washing out of the speculators, the people who, bought high, rushed in during the pandemic when crypto was on a bull run. And now they're upset because they only bought as a quick flip turnaround. The people who've been in crypto for years and years and actually believe in the technology and believe this is a real thing, they're going to hold on and leave it alone. And they're not checking the price every single day, and they're not panicking and dumping. So things are probably, yes, going to get worse before they get better. That probably goes for both tech stocks and crypto. But crypto will continue to exist. That's what I am telling a lot of people right now who ask.
Right. And what do you think the potential catalyst would be for a reversal in sentiment for crypto assets? Do you think it's primarily tied to the macroeconomic themes we talked about, like inflation and interest rates? Or do you think there are crypto-specific events like the Ethereum merge that is hopefully upcoming
Right.
and others that will drive that? What do you think kind of the major catalyst will be?
Yeah, gosh, I mean, that's the question, right? And something I always like to say, and I've been saying for years, first of all, is like, don't believe anyone who claims to know what's going to happen next with crypto prices. Just no one knows. As we talk, Bitcoin's down to 23K. In a week, it could be up to 30 again, or it could be down to 15. But a couple things I'd say. You nailed it by mentioning the Ethereum merge. Now, of course, that's specific to ETH. But as people probably have seen headlines about the merge, all you really need to understand, if you don't care much about the tech here, is that currently Bitcoin and Ethereum, which are two separate blockchains, two separate networks, run the same way. But supposedly when the merge comes for Ethereum, which has been delayed many times, Ethereum will change the way that it works, and it will become far, far less energy intensive. It will use a lot less energy. The efficiency should increase. The speed should increase. Gas fees should go down. All of this, hypothetically, should be good for Ethereum, the asset. So we'll see. Now, of course, maybe the merge comes and it doesn't happen, and boy, that would be bad for ETH. But that's for Ethereum. As far as Bitcoin goes, really pay close attention to the 20,000 level now. A lot of people think that 20,000 is going to be the bottom, or that it'll get close to 20,000 and then it has to rebound. If it doesn't, if it were to fall below 20,000, then it's anyone's guess as to how low it goes, because 20,000, of course, is the peak of the previous bull run, the pre-pandemic cycle at the end of 2017. And what we've never seen Bitcoin do in a bear market is sink below the high of the previous bull run. So we talk a lot when it comes to Bitcoin about resistance levels. And, for a while it was 30, then it was, 35 as it went up. It got as high as 67,000 last November, and it was seen as, 60,000 was the key level. Watch that low 20s right now, because if Bitcoin goes below 20,000, woof.
Yeah, for sure. And yeah, there's definitely So many factors to watch out for, and yeah, I agree. Nobody can predict the markets. We can all look at the resistance levels, but you never know where it's going to go in the short term. Um, in the meantime, before we think about all these catalysts, what do you think this will mean? The Terra piece as well as Celsius, et cetera, for crypto regulatory scrutiny. Do you think
Yeah.
regulators are going to change their outlook?
Yeah, I figured that's where we'd go next. It makes a lot of sense. It's probably the biggest story within crypto right now, honestly, regulation is. And first of all, what I like to say about that is a lot of people in crypto get very upset even by the word regulation, right? Oh no, regulators are seen as this big boogeyman. But regulating an industry is not the same as shutting it down. And I think a lot of people conflate those two things, and they make a mistake of thinking that, all of the lawmakers and politicians who say big, strong things about crypto and regulating these assets, they think that they want to shut down crypto, which, first of all, at least when it comes to Bitcoin, you can't do. I mean, no one can just shut it down. Good luck with that. But, look at Joe Biden's executive order, 2 months ago, which had a lot of word count for not saying much. But what it really concluded was, hey, regulators and agencies, let's all get on the same page about rules of the road here. That is not the same as saying, this stuff looks evil and is used for crime and we should get rid of it. I think a lot of these people, even though crypto people don't like what they're seeing these politicians say, they recognize that this is something that's not going away. So, long way of saying that, yes, more regulation is definitely coming to the space. They want companies to practice KYC and AML rules. That's know your customer and anti-money laundering. And a lot of these crypto exchanges don't want to touch that because the whole point and the whole ethos of crypto was privacy, don't ask for my info, it's outside government control. So there will continue to be a fascinating push and pull between the mainstream investors who've gotten into crypto in the last 2 years, and they want regulation, they want safeguards, they want protections, and they think that once those protections come, even more regular folks and retail investors will get in. So it's those people on one side, and on the other side, the OGs. The people who, in many cases, they're libertarian. They got into Bitcoin in the first place because they liked that it was unregulated, it was outside government control. And, the rubber's going to have to meet the road at some point. And either, those folks will get upset when crypto gets more regulated and they'll get out, or they'll look to something else like privacy coins or DeFi that are really outside, control. Or they'll, just adapt and recognize that crypto investing is now mainstream in the same way. At some point, I expect a Bitcoin ETF, a spot ETF. But Gary Gensler hasn't allowed it yet. He allowed a futures ETF instead, which is not quite the same. So I think more regulated, protected crypto investing vehicles are coming. And if companies want to try and not play ball and be evasive, they'll have to leave the U.S. But a lot of the leading companies are seeing the writing on the wall, and so they're being friendly with regulators.
Got it. Yeah, that makes a lot of sense. Now, we're just coming up to the end of our time here. But before we drop, any parting words, predictions for the second half of the year, or even reflections on, the last 24 hours in Celsius that you want to share as we close off?
Sure. I guess I'll plug our site. If you guys want to learn more, you should head to Decrypt, decrypt.co. I write a weekend column, on the biggest news of the week. And last week I wrote about all the layoffs, and that was even before this kind of the meltdown intensified. So now we've seen more layoff news. Crypto.com is cutting 5% of its staff. BlockFi, the company I mentioned earlier that does the same business model as Celsius, they just announced 20% layoffs. And, these are necessary business measures when there was some irrational exuberance. I think a lot of these companies that made a ton on trading fees during the pandemic, they kind of got ahead of themselves. They announced huge hiring initiatives. They spent oodles of money on sports marketing. I mean, look at the exchanges that put their name on giant sports arenas. They probably got a little ahead of themselves, right? So you never want to see layoffs. But what I wrote about is, don't mistake this as like, oh my God, the whole crypto industry is pulling back and is in bad shape. At the start of the pandemic, we saw companies in all different industries make cuts, and they're brutal. You hate to see it. But financial media didn't say, ooh, this means these companies are going out of business. But they say it when it comes to crypto companies because so many people still think crypto is so new that we can't be sure it'll still exist in a few years. But Bitcoin's been around 13 years. So how many more years does it have to exist for people to recognize it's a real thing? So that's just my kind of cold water take when you see big bad headlines about these crypto company layoffs right now. And there will be more of them to come.
Yeah, for sure. Totally agree. It's important to keep all of this in balance and in context. And yeah, crypto does get a bit of a bad rap sometimes, given how new it is, but that's part of what makes it fun.
Awesome. Exactly. It's fun, isn't it?
It sure is. Every day, something new. Awesome. Well, thank you so much, Dan. Really enjoyed having you on. I learned a lot, and I'm sure our listeners did too. So thanks, everyone. That will do it for this week's session of Crypto Club. Be sure to tune in every week to hear from the most influential innovators in crypto and to get the latest news fresh off the blockchain. Thanks, Dan. Thanks, everyone. Have a good
Thanks,
evening.
guys. Good fun.
If you would like to see more content like this, subscribe to our channel and download the public app where you can listen to these sessions in live time.